couldn't make that money in a stock market portfolio if we just put that money in the stocks. There was no losing with it. And I think that made it easier, obviously, to kind of go into it. The house was not pretty at all. Like, it was bad.
Welcome to the Golden Nuggets of Real Estate Investing, a podcast dedicated to helping you achieve financial freedom through real estate. We'll be discussing the most important lessons, better known as the Golden Nuggets of Real Estate Investing, entrepreneurship, and personal finance with new and experienced investors to help you get into real estate investing or scale up your portfolio. So make sure to tune in. What's going on, everyone? It's Nedaee. I'm a real estate agent, an investor, and host of the Real Estate Golden Nuggets podcast. I have an amazing episode full of golden nuggets for you. If you like this podcast and gotten any value out of it, please share this far and wide to reach as many people as possible. If you are listening on Apple Podcasts, please leave me a 5-star review. If you're watching on YouTube, leave me a comment, like, subscribe, and hit the notification bell so that you can stay up to date on the most recent episodes. Thank you so much for your support. What's going on, everyone? Welcome to another episode of Real Estate Golden Nuggets. I have a special treat for you guys tonight. I have Amanda Bolan from Saskatchewan. She is a mother of 3 and is currently sitting in a portfolio of 24 doors. So I'm very excited to have her on board to teach us and then let us know a little bit more about her experience and, more importantly, the market in Saskatchewan. So without further ado, Amanda, please give us a little bit of introduction about yourself and talk a little bit how you got started.
Well, I'm Amanda Bolan. We're in Saskatchewan here. We primarily invest here as well. We got started, I think, like everyone does. You kind of get that interest and you want to pursue it. And it's like real estate is the idea. And as you go down that avenue and you start exploring it, you realize all the different opportunities as you educate yourself and learn more and more about it. And so I think we just came to the point one day where we stopped thinking about it and actually started pursuing it.
Right. So what was that extra push that gave you that, ability to go, you know what, like, let's go ahead and take action versus just, analyzing and looking at things, right?
For us, it was a bit different. We were heavily into oil and gas for a number of years. And that was also part of the reason why we'd never gotten into real estate. We were always too busy, the time wasn't right. We had a young family, all of our kids were too young. And between that and being with my husband being on the road frequently, it just wasn't something we had time for. And ironically, it was something in a moment where we were pushed up against the wall and we had the oil field was having a hard time and a company had actually bailed on us. And we had quite a bit out in invoicing to them. And basically it was looking like we weren't going to get paid at all. And this is after a long, slow period as well. So it's just like compound upon compound. And it was like, what are we going to do? And that was what gave us the push to actually get started on that first real estate investment. We're like, you know what? We suddenly have the time. So we can choose to complain about it and, be upset about where we are, or we can do something about it. And so it actually gave us the motivation and that push to actually take on our very first flip that we pursued.
Wow. So you started with a flip. Wow. That's pretty dangerous for somebody just starting out. So what made you decide to go with a flip to begin with?
Design is a major passion. I'm pretty good with budgets in the construction space and in renovations. Mm-hmm. So I think we had analyzed enough deals and really had I was constantly looking at deals. I was constantly analyzing, being like, hey, we should do this. We should do this one. And I don't think my husband was quite ready to pull the trigger yet. So I think that was for us, I guess at that time, we saw rentals as being something down the road. Multifamily was something we wanted to do eventually when we grew to it. Mm-hmm. But so that was kind of the motivator. We really didn't know anything different. It was single family housing rentals is what we were familiar with, or flipping was our idea of real estate. It was very limited at that time what we knew about how vast real estate can actually be.
Yeah, and that's very common because people watch, the HGTV shows and they think, that's investing. Like, I need to buy a property, fix it, and then I sell it back on the market, right? It's a very common, I think, misconception from a lot of folks that are new. But as you know, there's so many different avenues, right? And I'm sure you're going to talk about some of the areas that you're now working on. So now, before you got into the flipping, you did mention you were analyzing. So did you have any sort of education piece to that beforehand, or was it just something you just picked up from a podcast, or you had books you read? Like what helped you there?
I think it was a combination. So we had completely gut renovated our own personal residence. And, I'd priced out a lot of things. I budgeted, we'd hired some stuff out. We had a good amount of skills ourselves. So I knew from that realistic numbers and then other things that we had done, small projects. And so that was kind of where knowing the numbers and being pretty familiar with it, I was confident in that area. The other side of it was books. I read through quite a few books. I can't think of some of them right off the top of my head. But they really broke down everything you need to consider, including the close, like all those soft costs I call that are actually quite hard when you when you start writing them down, right? Your sale costs and all those things, your holding costs, your utilities, all that kind of stuff. So I actually had line items for all of those and pretty good estimates on all of them and rounded everything up on that first deal. And I rounded our potential sale price down. So I figured I had padded our deal enough that if it worked the way I had ran the numbers, it probably would be successful. It had a high probability, and it was.
Right. So were you confident on the purchase price? And by the way, did you find it on the market or was it off market? Like, where did you build the confidence to say, you know what, this will give me the cushion that I need?
Yeah, so it was actually on the market, but we had decided to go ahead with a flip, and there was another property we were actually looking at. And when I had called to ask about the property, the agent informed me that it was actually sold. And I'm like, well, it's still on here, so maybe conditions haven't been lifted. Is it conditional? Or is it sold? And she's like, no, it's sold. So I'm like, but it's still up here. I can still see it.
Right.
And I wanted to be sure that it was a firm deal. And she's like, literally, the guy next door is pulling condition, like he's putting the paperwork in. I'm like, oh, okay. But while I was doing that, I pulled up the MLS and there was a property there. And it was almost identical to what we were planning on buying, but it was significantly less. And I was like, wait, what? What is this? And I actually thought it was a property that had been misplaced on the map. Like sometimes on the MLS, you'll look at something and it's actually in another city somehow. I don't know what the glitch happens. But so I actually didn't even think it was there. So I pulled up Google Maps while I was on the phone with the agent. And my husband was at the time working on a project. He was on night shifts. And so he was sleeping. And the agent, I'm telling her about this place and she's like, oh, I don't know what you're talking about. That's not on the market yet. And, there's nothing there. And I was like, no, I'm looking at it right now. We need to put an offer on this, like right now. And apparently it had just hit the market. And so we actually found it sort of by chance. I was taking action on another property and happened to notice this anomaly. So it was the exact same product, same type of property, a little bit different, I guess, in terms of what we were going to do with it. But it was about 40% less, which was insane. I couldn't believe it. I honestly could not believe it. We just we'll take it. We will take it.
Wow, that's amazing. So did you pull out like some sort of inspection on the property and so forth? Did you go firm? Like what's the common, I guess, strategy there in Saskatchewan? Is it pretty common to get firm deals like GTA, or is it a little bit, you still have a little bit of leeway there?
In that market, we had leeway. In Saskatchewan as a whole, I think that's very rare that somebody would put a deal. Like I always see that and I'm like, why are you guys doing that? But we have a fair bit of grace. And so we did go all cash on the deal. And we also said 2 weeks closing. So pretty quick.
Wow.
And I did put a clause in there just because, like I said, Kirk had no idea about this thing. The reason why I was confident paying for it the way we were is I knew what lot value was in the area. And this was below lot value. And so to me, it was just like a no-brainer. Like we had 3 options with this place. We could plow it over and do an infill. We could simply buy it and sell it to another developer and let them develop it, or we could flip the property. So there's 3 very viable options. And that's where I felt confident moving ahead on it. So I did have one 7-day escape clause just in case Kirk hit the panic button. Like, what did you just do? You just put in an all cash offer on this deal. And so it was a fairly reasonable deal. It was a great deal to start with in terms of cost. But yeah, so that was kind of how the first property came about. It wasn't, I guess it happened to pop up while I was taking action on another property.
Yeah, and I absolutely love the fact that you had, 3 different exit strategies, right? You went with not just I'm gonna flip it no matter what. It was like, no, if this fails, I got B and C, right? Which is very, very key because unfortunately, as much as we like to get excited and there's emotions involved, you got to take the emotions out of it because at the end of the day, it is numbers game, right? And it is a business. So I'm glad that you had those contingency plans just in place. So tell me a little bit about the numbers. So what did you purchase this at and what type of renovations did you do?
Hold your seat. The purchase price was $40,000.
What?
Yeah, I was like, what? I was like, what?
Is
I
this
was
a
unheard
single
of.
family or
It was
what?
a
What did you
single
get?
family house in a smaller city, but still at that time, that was like unheard of. Like I said, this was about 40% below lot value for that type, probably even less. Like it might have actually been like almost 50%.
Wow.
So I just knew, like I said, it was guaranteed. I'm like, you couldn't make that money in a stock market portfolio if we just put that money in the stocks, in the sense of if we just simply bought it and sat on it until a developer bought it. Like
Right.
there was no losing with it. And I think that made it easier, obviously, to kind of go into it. The house was not pretty at all. Like it was bad. I didn't know to what extent it was bad because I didn't see it till later. But like I said, we knew that no matter what, something was going to come up the deal. And whether it was sitting on it and plowing the house over and just, keeping the grass cut and moving along. So that was really okay. So we bought it for $40,000. Our total all-in budget on the place, we got lucky on a few key items. Like I didn't have to replace the siding in the end, and I didn't have to replace the roof, which we were expecting to do.
Right.
And so we didn't have some of those major costs. We only put 65 into it all in,
Okay.
including like our sale costs. So that was everything all in. We did do sweat equity. There was some sweat equity. We spent about 6 weeks on the project.
Right.
Or 8 weeks, pardon me. It was 8 weeks on the renovation. And we did hire trades alongside of us to obviously keep it moving to be able to be done in that kind of time period. And then we sold it at $172,000.
Wow, that's a really good project and a good one to begin with. Really, right? So again, just to go back to numbers, you bought it for 40. Sounds like you spent 60,000 on renos, you said, or was that included with the purchase
65.
price?
Yeah, no, we 40 plus 65.
40 plus
65
got it.
included all of our holding costs, sale costs, like everything all in that we put into it.
Right,
And then
right.
the remainder was profit.
Wow, beautiful. Yeah, that's a home run right there, especially for the first project. So from there, what happened next? Like, what did you do from there? So you got the profits. Now what?
Yeah. Now we went to look for another flip because why not? We had high expectations and it had gone very well. We had sold it within 4 days of hitting the market. We'd priced it well. Like, the person who got it got great value and a beautiful home. And that was, we took something that was, forgotten and walked away from. And then we came back, I guess, like, because this was out of town. It wasn't a flip where we lived.
Right.
And we just kind of started looking for the next deal. And I think it was about maybe 4 weeks after possession that we were under contract on the next property. And so we took on a second one, more expensive, like a normal bungalow. That one was about $171,000 on the purchase price. And then rinsed and repeated and did that second flip. So I guess it was about within a 6-month period of time from the start of that first one to the second finished one. So it was pretty quick, I guess, in the big picture, but it felt like there was a bit slower in between.
Yeah. So again, I'm assuming at this point in time, you definitely had some good contractors that you can rely on. You knew they can turn things around, and you had the financings in place. So with the two projects, sounds like what was the profit of around 100K, I would assume, or a little bit more?
Yeah.
Yeah. So within 6 months, you made 100K, basically.
Yeah.
That's amazing. Yeah. Like, that's what I mean. That's why I love real estate, because nothing will give you that kind of return, like literally.
No. Yeah. And I think that's like, and some of that, there's some sweat equity in there for us, but at the same time, we had trades, we had plumbers, we had, the second one, we had more, like we hired out demo, we probably hired out way more on the second one. Just to keep things moving along. Also because our kids were actually back in school and this was out of town. So it wasn't like we could both just be there to be, to push the project through or whichever.
Right.
And so that really changed on that second one to help keep moving things along as well and to keep within those tight timelines. But yeah, so within that, you can't get returns like that in a lot of places, but real estate you certainly
No,
can.
absolutely. So when from there, did you transition now into more buy and hold? I'm assuming you have a portfolio, right? So I guess after that, did you guys decide, you know what, we want more? Is it cash flow that you're after, or is it more equity gain? Like what is the long-term plan for you guys right now?
Long-term plan is definitely building a large multifamily portfolio and really take care of that, I'll say semi-passive income. You're always gonna have to take care of your business to some degree, whether you're
Hmm.
managing or not managing, there's still something to manage. But yeah, so that's our big goal. And just to keep creating that financial independence, we've been self-employed for a number of years. I left my job at the mines quite a while ago, but our actual other business, it's been a long time that we have been self-employed. So it has been nice to be that, but really just create something that's more stable and consistent. And also that it's growing in value every year over year. And that's been hugely important to us. So that's where we shifted into the multifamily space. And I think that second flip, we were in that. And the beautiful thing about during these flips, my husband and I actually did a lot of audiobooks, a ton of just, chatting back and forth and talking about our, where we want to head, what we want to grow, who we want to become. And so it was really neat what was able to grow out of those flips. So it was kind of in that second flip that we were like, why do we have to wait for multifamily? Like maybe this is something we can pursue a whole lot sooner. And so it was always something that we thought we would grow into, like flip our way until we had enough capital to like start to pursue that kind of dream and start to get, those 16 units those at a time or 12 or whichever.
Right.
And so during that time, the question became like, why should we wait? Like, what if we could do it sooner than we thought? And so it was really during that second flip that we actually made the decision to say, like, we're going to go after it. We weren't 100% sure how or how that was going to look. We were listening to a lot of stuff and reading a lot during that process. And so it really came down to just the decision we made where we're like, let's do it. Let's go for it. We don't have to wait.
Your portfolio, is it primarily of fiveplex and more, or do you have like single family duplexes, or what does your portfolio consist of currently?
We have two 12-unit properties. So not large, like multiple buildings, but we do have two 12 units. We got our first 12 unit April 1st of 2020, we took possession. And then the second 12 unit, February of 2021 here, we got possession of it.
Okay. And I have to ask, what were the prices and how did you get the financing in order?
Yeah. Both of them were north of $1 million in that 1.1 to 1.25 range. The first deal, we did CMHC right out of the gate. We were able to do some creative strategies in terms of with a vendor take back. And we were able to get really preferable financing with CMHC with their 85% LTV. We stacked that with a 13.5% VTB and had to come to the table with 1.5% down on the first building.
Wow. I love that. That's what it is. Like that's what I was trying to get at, because you went from the mindset of let me flip, save some money, to now owning two, multi-unit buildings, and that too in a creative way, right? You didn't have to cough up the money and come up with the 25% down payment, right? You figured a way where you can, have some vendor take back and also get some CMHC loan. So what does that cash flow look like in those properties?
It's pretty solid. This is the beautiful thing about Saskatchewan. Saskatchewan went through a huge slump with rents post oil crash. Our natural resources, it went pretty bad between 15 and 18. 18, we started to see some flattening out. 19, we started to see that uptick. 19 was like when I was like, we need to start thinking about rentals because this is the great time. We were reading about market cycles, and I was like, oh my gosh, Saskatchewan's at the bottom. This is great. It can't get worse. And rents had sat flat for quite a while at that point. And then in 19, when I started to see that little bit of uptick, when I was looking at the CMHC numbers, I was like, oh my goodness, this is the point where we need to get in. And so to be able to get in 20 and 21 here, where we are seeing consistent rent increases, not anything like that's out east by any stretch. But we're seeing like a good amount of stability. You're buying off the books, multifamily. That's what I love about the commercial space. You're buying based on the numbers. And so if you're buying it, at a specific cap rate for your market, you're going to have that cash flow out of the gate. And especially with interest rates right now, it's crazy
Right.
how cheap money is. It feels like it's almost free. So both of those properties are doing, fairly well. Our one property is like, my mind is blown by that one. But we're sitting, in that 2,000 to 4,000, depending on which property we're talking about, for each property.
Wow, beautiful, beautiful. So what does the market rent look like? And then those units that you got, are they consisting of, bachelor units, one bedroom or two bedrooms, or like what does the building units look like?
They're two very different products. So the one building is, it's a 12 unit, walk up, and it has 11 one bedrooms and a bachelor suite in it.
Okay.
So it's, it's near the university. It's a great location in a great area. We just love it. And that was our first building. So we're like, oh, it's so cute. I'm just kidding. And then the next building is a bit different. It's more like, they're not townhouses like 2-story. They're like single level, no basement, 2 and 3 bedroom units. So it's not specifically a seniors building, but it's a great product for perhaps a tenant with mobility issues.
Right.
But that's not specifically what it is. It just, it fits very well.
Yeah. No, that's phenomenal. Yeah. So where in Saskatchewan are these? Are they in Saskatoon? Like which cities are you investing in right now?
Right now, we're right here in the Saskatoon market. We love the city as a whole. We've talked a bit about that. Saskatoon is great. Like there's a lot of businesses kind of moving in. There's a lot of jobs. There's a lot of immigration coming into here right now, I think across Canada as a whole, but in terms of, we're in the top 10 for growing cities in the country. Even that demographics surprised us a bit, as we've been watching the numbers. And I think COVID kind of hid that a bit because we didn't have students here. Right. A lot of stuff was online in 2020, but here in 2021, when schools were announced to be back in, it really became evident how much, there is starting to become a housing crunch. And I think we're going to actually see a pretty good compression again on vacancy rates, because we've had those coming down to a good healthy level in the last couple of years. But I think this year we'll be sitting really competitively low in favor of, the owners.
Right. And then within those markets, I mean, what does an average bachelor unit look like market rent wise at 1 bedroom or 2 and 3 bedroom?
It's very different. So it depends on the areas of the city. In our areas, I put them as like a B to like B plus, like they're quality, good neighborhoods, walkable. Right. The one neighborhood is a top 5 walkable area in Saskatoon, so it's very desirable. A bachelor unit is around 800. Maybe I'm seeing, I haven't turned over a bachelor unit in a while, so that's good. But it's kind of, that's on the uptick. So you're about 800, 900 for a 1 bedroom for a basic clean apartment. Would be pretty standard. If you're bumping it to a renovated something or another, you might be pushing, 950, 990, 995 kind of thing for a 1 bedroom. And then the 2s and 3s, they're going up from there. So I think we're anywhere from 1,000 to 1,250.
Yeah, well, those are really good numbers.
But in terms of actual rules, if you're able to stick to the rules, which are pretty fair, it's pretty landlord friendly. We don't have limits to rent increases. We don't have a lot of those kinds of things that, maximum increases per year. Now, we don't have a market that allows the kind of increases that can be seen out east in, turned over units necessarily. But overall, the only restriction that we do have is that you have to give 12 months. This is the down one, 12 months notice for rent increases to existing tenants that are not on a lease, like if they're month to month, unless you're part of the Saskatchewan Landlord Association. And then you can do it in 6 months, which is still quite a while. But I mean, it's reasonable and it's totally workable. So that's the big key here in Saskatchewan, is to stick to leases versus month-to-month rents.
Right. That's interesting. Yeah, because in here it's kind of the other way around. People want to do month-to-month and not do yearly in case something goes down, right? And then in terms of evictions, let's just say tenants aren't paying rent and they are in a lease, like how soon can you get evictions done? I know COVID obviously has slowed down a lot of things, but is that something reasonably done and fairly quickly done in Saskatchewan?
We've been fortunate to we have had an eviction, but we've been pretty fortunate with that in it not taking any sort of amount of time. And not really being out a whole lot, or if any, like overall, I guess
Right.
the way ours have gone. I've heard of worst case scenarios, like when somebody's fighting it, that could drag on. So I would say pretty reasonably, like here in Saskatchewan, if you haven't paid rent on the 15th, you can serve. And then within, I believe, a week or two of that, you have your papers to have the bailiff come in. Usually within 2 to 3, 2 weeks to 4 weeks, you're you should have possession back of your unit, unless there's a dragged on process that I would say would be an anomaly here. And I would say the exception to that would be wintertime. Like what I've heard from fellow landlords is that basically come wintertime, they kind of put a pause on that till spring. But at the same time, overall, like I personally don't, I know quite a few landlords and I haven't heard major horror stories. So maybe it's just that nice, kind Saskatchewan people.
And then in terms of, I know you touched upon a little bit in terms of the industry. I know oil and gas is huge, but what other specific industries and jobs are you seeing emerging in Saskatchewan right now?
Potash is having a bit of a comeback. There's been a pretty large expansion or / opening of another mine about an hour out as well. I believe that's potash. Don't hold me to it. So with increasing prices here as a whole, so we have uranium, we have gold mines, we have, I don't know, there's all kinds of odds and ends, I guess, in terms of what we have for mining. I guess, so that's a big one. And right now, some of those companies are doing well and are coming back. The big one, like I said, out by Humboldt, that one's opening up. BHP announced like they've already sunk billions into the infrastructure below ground. So now it sounds like they're actually going to go ahead with the opening. So in the next few years, that's going to really boom for that community.
Right.
And then tech is actually one of those new up and comers in Saskatoon, where I think people like affordable office space, kind of the environment. Saskatoon's environment is really vibrant. There's usually a lot of festivals and music, and we have lots of really great little restaurants and the whole downtown core. So it's very vibrant in terms of attracting a younger family crowd, or just in general younger crowd that way. So tech is opening up and setting up. There's a few homegrown companies here that are actually taking off and are quite, doing quite well from my understanding. I think some of them are going to be going public soon. Otherwise, it's very much like a mishmash, because when we look around, we're like, what is going on? And it's a lot of just different little things that are happening. And so I think just as a whole, people in Saskatoon are excited about the affordable cost of living, our overall, the cost and expense of general life here. And so I think that's drawing a lot of people here to come and set up shop in Saskatchewan. Like I said, there's been quite a bit of immigration. I know that as well, that there's been a lot of push to that. And I think also being a university city, I've always said that, the university's stable and it's never going anywhere. And then COVID happened. It's like, it was kind of weird.
Surprise.
Surprise. There's like hardly anybody. But even still, there was still students in the area looking for places, because they didn't want to look like, nobody wanted to live on campus. Like there was nothing happening on campus, and there was nothing to do, and you couldn't do anything. So people were looking off campus still, even last year. So I guess it's quite a wide, we have agriculture. So quite a wide variety happening here in Saskatchewan right now.
That's awesome to know, because generally speaking, we think of oil and gas immediately, right? When you think of Saskatchewan, for instance. So it's good that there's other emerging markets, and that I'm sure gives you the confidence that, this is an emerging market and it's going to continue to grow, so that you can continue to invest. Now, what are your thoughts about investing in other cities of Saskatchewan, like Regina, for instance? Have you looked into that? I mean, I think that's the second biggest city.
I grew up in Regina. I was born and raised there. And it's a great city. I don't want to get shot here. I'm just kidding. It's not like that. I struggle with Regina, and I think a large part of that is one of the things I think about in real estate. Sometimes people focus too much on the price per door when they're looking at a market, without looking into the details of what's around that. And one of the things Regina has is fair bit higher property taxes than Saskatoon. I've noticed in the multifamily space.
Right.
And the price per door is pretty darn similar. So that eats up your cash flow in a hurry when you're shelling it out in taxes. It's a nice community, it's a nice city, and it might be for the right person. And I think there's deals to be found in any city, regardless of thoughts on it. We personally aren't looking there. But if you can find a deal that cash flows and makes sense, like I wouldn't be shying away from it in Regina.
Yeah.
It's
And
very much a government town, I guess would be the best way of putting it. So it's a lot of government jobs, pretty steady Eddie that way. So it's not a bad city. It's very different.
right. And then generally speaking, whenever there's a big city, there's also small little markets and pockets, right? That a little bit more affordable, you can say, folks that commute, I'm sure, right, from the city into the little suburb areas. So are there still little pockets around Saskatoon that you think are emerging or are growing?
Yeah, there's like Regina and Saskatoon both have little bedroom communities that aren't so much just bedroom communities anymore. They're starting to have their own little shops and popping up. And so, yeah, there's like a good amount around both of the cities in terms of small communities that are growing or strong or vibrant, lots of growth happening in them. People are willing to commute in. And then the cities themselves, like we're pretty affordable as a whole for housing within the city. So it kind of just depends on what people are looking for lifestyle for their families, right, and how they want to live. So usually if they're moving to the smaller areas, they're typically moving to have more room, a little bit more room in a yard and, some of the perks that you might not have as much of in the city.
With that said, I mean, what are some challenges that you face there in investing in that region?
I'd say not a lot of inventory is probably one of the biggest challenges. There's a lot of investors looking. We're competing with a lot of, Eastern investors. I see some of them on my Instagram and I'm like, I know that street. You're in our stomping ground. I'm just kidding. But kind of, no. So I'd say that's probably one of the biggest challenges right now. And I think that's just a challenge in general in real estate. And I don't know if that ever goes away. There's always somebody looking for something, and it's really just being willing to look for that anomaly or see something that maybe wasn't missed, or getting the inside scoop and getting that off-market deal first. And that's kind of, being on the prowl. So I think that's probably one of the biggest hurdles. It took us quite a while to get that first deal under contract, to actually track one down, to, get our bid accepted and actually be able to move ahead. So that was probably one of our biggest hurdles, is finding something that meets our criteria. Like, we want to see cash flow. I'm not willing to buy something that's not going to actually have a return on it.
For sure. And by the way, did you find those on market, or was it off market, the two properties you purchased?
The first one was completely off market. It was a private sale. And the second one was a pocket. So it was through agents, but it was somewhere where I had gotten the scoop before it didn't go to the MLS.
Yeah, beautiful. Yeah, because that's the best way to beat the market, or beat the other buyers, you can say. What about contractors? Is it a challenge to hire contractors or trades? Because of course they're also in high demand.
Yeah, I think it is to some degree. We do a lot of our own renovations. We have been fortunate enough now to start to meet people. So there's just some jobs I don't do just because it's I'm busy, B, I don't need to do everything to have a successful business. That's the beautiful thing about the commercial space, is like you can budget for that, and chances are there's gonna be a good return in it. You can afford it and be able to do that. So we have, been fortunate to start to grow that. And I think that's relational based as well. So as we found people that work great, we just try to keep them busy, or, connect them with others and that kind of thing. So we're pretty good right now. They're not necessarily mainstream brands in that sense. We found really great, owner operators and word of mouth, and that's worked out really fantastic for us.
So Amanda, what's next for you? I mean, it sounds like, are you still continuing to do flip on the side, more for the active side of the business, or are you more focused now on just, continue to grow your portfolio and more focus on the buy and holds?
Like I said, I enjoy the design side, and we laugh about it a bit because I'm like, man, I have the itch to do a project, but I don't know that it's necessarily a flip. I mean, we did well on our flips, so it's not necessarily off the table. I find Saskatoon specifically probably wouldn't flip here. I know flippers here that seem to love it and keep doing it. And I'm sure they're doing well. I personally haven't found a deal that I'd be willing to pursue. But yeah, so what we are doing for more that side of things is we have a land development. And so that's one of the things we're going to go ahead and do, is actually do a new construction home for that same thing. So it's the same idea as a flip, except for just instead of having to demo anything or deal with any surprise, you just have your budget to begin with. And so, so that's something we are going to do in terms of, for the active capital side, is to build the house and get some of the design stuff. And that's something that I just simply enjoy doing. But really the purpose in that is really to move into multifamily. Our bigger picture goal would be, we'd love to actually start developing new construction multifamily. And so that's something down the road. And so it's just building up to that. So I would say that that's not necessarily our focus. That's something that we kind of do. It's like when you're completely self-employed, you have different avenues and different streams and different ways you do things. And then in the process of that, I'm still actively looking for a next multifamily deal. So we are definitely pursuing that. We're in a position to, move ahead on another one here as soon as we can find it. And so that's the big one. And so, so I'd say it's kind of a twofold thing, but our more time intensive focus would be the multifamily space and pursuing another deal there.
Yeah. Fantastic. Yeah. It's one of those, you can't stop that itch. You're always itching to get the next property. I know exactly how that feels. In terms of just like the method that you're using, so it sounds like, are you still like burning these projects? So how is the refinance look like? Are you able to pull in some, equity back and pull out your, capital that you put in the down payment or the renovations? Are you getting like perfect burrs or nearly burrs? Like, is it possible to do a perfect burr in that region?
Yes, in the single family space, absolutely. In the multifamily space, potentially. Like right now, I'll let you know and confirm when we cross that line officially. Right now, we're kind of like a slow burr method. So our first property, because we did get it in CMHC right away, we won't be refinancing that for 5 years. However, the cash flow from that will return our capital that's into the deal before that 5 years is up. So just from cash flow. So that one will become its own kind of burr. We're doing the value add. We're raising rents. We are renovating, that kind of thing. And so that one will get a refinance component, but it won't be until the 5-year point, just because we were already into that CMHC financing out of the gate. The second property, we were actually going to put in CMHC financing as well. Until we realized that we had a pretty significant amount of equity we'd be able to add, and that we were also getting on the buy. And so because of that, we put it into a 2-year financing plan. So pretty quick, I guess, in terms of multifamily. And so we have a 2-year target to hit for rents. And then at that point, we will do, that one should be 100% clean burr on the refi. So provided everything continues as it is with that property, we don't see that being any sort of issue come the refinance.
Yeah, you know what? That's the biggest question that I always have, right? When I'm interested, of course, I'm looking at outside Ontario at this point. Like you hear these, numbers in other provinces, like New Brunswick is another huge one. And what worries me is just like, hey, if I purchase a property there, is my money parked for a certain amount of years, or can I recycle it, right? Like how soon can I get out of the deal so I can continue building that momentum and getting another next property and so forth, right? So
I know in our pursuit of this deal, we probably would have pushed for a quicker burr, interim financing of some kind, if we had known how much we could have done on the value add. I was really conservative on it because the product was very different than anything anybody I knew had. So I wasn't 100% sure we could drive the value as quickly as we have on that property. And so right now, I think like we could probably refinance if we were wanting to by spring and be like good to go, but we'll ride out another full year cycle, which doesn't bother us in any stretch. It's got good cash flow. We plan for 2 years. It doesn't really affect things one way or another, but the funds will get recycled and people will be able to move along. So that one's done really well. So I would say it's possible. It's just finding that right property to meet those needs. Yeah,
for sure. That's the deal is probably the hardest thing to find and the most critical. Absolutely. Let's now go to, I guess, our end of our podcast. Amanda, if you could suggest anyone, let's say one book or audiobook or something to listen to or read, what would that be?
Psycho-Cybernetics. Have you read that?
No.
It's curveball. Plot twist. It's not a real estate book. It's not an investing book. It's a psychology book, a mindset book, and a plastic surgeon wrote it. And basically, in a synopsis of it, is he started down the whole road of why we think the way we think about ourselves or how we act, because he would do plastic surgery on people and realize like some people would have huge changes, whether it was from a horrific accident, but their mental break couldn't let them see that change that happened. And other people, he would do like the smallest revision that he could hardly tell, and they would feel like their whole world changed. And so he's like, how could that even be? And so leave it to somebody who's not in the industry to like head down that road. And so he wrote this book basically on his findings and his studying of how we see ourselves and how we carry ourselves and what we do in life based on our thoughts and our own self-image. So it's a really neat book. I know it sounds like off in La La Land, but it is honestly a major game changer for my husband and I in being willing to step into 7-figure deals for our first rental properties.
Yeah, fantastic. I definitely have to read that one out. If there was, one piece of advice you can give somebody starting out besides taking action, what would that be?
Start sooner. Oh, wait, is that kind of the same thing? I would say, really decide what you want. Big picture, what do you want? And not just what do you think you're capable of doing right now? Like really, what do you actually want in life? Like what is your ideal lifestyle? And that it could be very different from yours, from mine, from whoever's, but genuinely to dig down and really decide for yourself, what does your ideal life look like? Like, what does that, is it, you're home every evening and you're relaxing with your family, you're doing whatever? Is it like you have this dream life where you're globetrotting and doing whichever, but being really honest what that actually means for yourself. And then being okay with saying, what's the next step to get there? So it is kind of a taking action, but it's actually just really making a decision, a committed decision for what you actually want in life.
Yeah, absolutely. Absolutely. You have to be really clear on your goals, right? And I think that really helps. And I love that you mentioned that you're on the strategy as well. It's very common for folks to jump in from one to another, and they either feel they don't know much about it, or it was like I'm reading a book right now. I'm sure you read it, Think, Grow, and Rich. Mm-hmm. There was a section that says something like about general knowledge and specialized knowledge, right? So if you're general, you can't really go far with that. A little bit here, a little bit there, but when you specialize, that takes you, the trajectory goes like this, right? Yeah. Because you constantly are implementing the strategy or using the knowledge and putting it into perspective. So definitely, I totally agree on that. Awesome. So for folks that want to connect with you, Amanda, how could they find you?
You can find me on Instagram at Multifamily Amanda.
Awesome. Perfect. Thank you so much, Amanda, for joining me this evening and providing us a ton of golden nuggets, especially for folks, like I said, that are very interested in Saskatchewan. This would be definitely a must listen. And hopefully we'll catch you in the next one. And who knows, you may be tripling or quadrupling in your portfolio soon.
I should hope so. We would love to soon. Thank you so much for having me on. I appreciate it.
Thank you so much for tuning into today's episode. I hope you were able to get some great golden nuggets out of it. The kindest thing that you can do is share this podcast across all social media to help as many people as possible. If you like this podcast or have any questions, feel free to reach out to me on Instagram or YouTube. I love bouncing ideas, people, and I love talking real estate. Thanks so much. I'll see you in the next episode. Remember, financial freedom is just a few properties away.